and investors, and also this report was produced by CNBC Africa's Derek Mohanji.
Uganda is actually built on 4 pillars. Firstly, mobilizing long-term capital for industrialization and infrastructure through products like infrastructure, sustainability bonds, and sukuk bonds. It's also focusing on broader participation and creating confidence by deepening investor education and outreach. We are also looking at the third one is digitization and technology, particularly of the regulatory processes. So in terms of licensing, supervision, and this is really in a bid to make the market more efficient. And then finally, strengthening the enabling environment via policies, legal and institutional coordination. And this is also aligned to the National Development Plan of Uganda. So together, we believe that these pillars will lower the cost of capital finance within the country and expand access to long-term funding and attract more investors to the Uganda capital markets.
And looking at the 4 pillars that you have outlined there, how do they translate into tangible growth for both domestic investors and also the foreign capital inflows at the same time?
So for domestic investors, we believe that there will be enhanced access to investment opportunities, there will be improved financial literacy, and simplified digital participation that will broaden financial inclusion. We also believe that this will encourage growth in household savings and also making the micro and small to medium enterprises financing more accessible and increasing and finding pathways through which they can access capital through the capital markets. For the foreign investors, I think there will be an expansion of sustainable financing instruments. As you recall, I mentioned we want to introduce things like sustainability bonds. So we believe that the introduction of green, social, and sustainability bonds will expand the offerings for foreign investors. And we also believe that the harmonization, regulatory harmonization with the region, which is one of the things we'll also look at, will create a more predictable, transparent, and attractive investment environment for our foreign investors. So we believe that a combination of this will boost confidence, increase liquidity, and foster tangible growth across all sectors.
And will this also increase listings on the Uganda's capital markets and also maybe attract more companies to raise capital? What more are you doing on this end?
Well, in terms of listing, of course, investor education is one of the things that is key, but also regulatory harmonization and having a regulatory environment that gives confidence to investors is what will improve listing. And I think in Uganda, one of the things that we have suffered is lack of awareness in terms of issuers of what they can actually bring to market. But however, also we have corporate governance regulations, which we issued in 2025, which raise the standards. And this will, again, for those who want to issue, but that works towards improving investor confidence. So we believe that that will contribute. The introduction of the sustainability instruments, I also believe, will also bring investors to the issuers to the market and therefore be able to improve the listings that we have. We also have a deal flow facility that we are working with financial sector deepen in Uganda, where we prepare and match companies for investors, and this creates a pipeline for the listings, for listing ready firms, because they work on their governance, they work on the reporting and the general management of the company. So we believe that also will create a pipeline for listings. And one of the initiatives we have is around strengthening the bond market, the fixed income market ecosystem. A Uganda Fixed Income Market Committee has been formed, and this is basically one of their mandates is to see how we can drive listings within the country. And then, of course, I talked about financial literacy programs where we think will create a strong investor base, but also create awareness among issuers and therefore create a bit of liquidity within the market. I think one of the things we've suffered is a very low liquidity within the market. So we believe that these activities and strategies will help and drive listings within the capital markets.
Definitely some key measures I am seeing there when it comes to boosting the investor confidence. But let us look at the private equity and also the venture capital funds, which are now under the CMA. So how are we likely to see them expand opportunities for high growth as sectors and also the private sector at large?
So firstly, these private equity firms are now going to be licensed by capital markets, and that in its own form creates confidence for those who want to invest in these PE and venture capital funds. But also the licensing comes with tax exemptions and enabling regulations. So for us, we think that the incentives that have been put around PEs and VCs is going to create opportunities and grow and help the private sector actually to access funds. So licensing by CMA also provides confidence. I've talked about that, governance oversight, and that is going to, I think, stir up participation. We know that this sector is already bringing in a lot of funds. About 1.7 trillion of Ugandan companies have been able to get, to the value of 1.7 trillion has been received by companies. And we believe that that this is only going to grow given the incentives that we've been able to put in place. So we believe that regulating the sector, the incentives, particularly is going to attract capital to high growth sectors like agriculture, energy, tourism, mining and mineral development, and even the science and technology sector.
I like that you've mentioned quite a number of pointers there in terms of the numbers that you've been able to achieve so far. But let me take you back on the listings apart. In terms of the numbers, maybe the membership that you've garnered so far, what numbers can we talk about here?
If I'm looking at the PE firms, currently we have only 2 PE firms within, but we have only 2 PE firms currently that are licensed. But I think this month we've licensed another, which makes them 3. And I think we are going to see a lot more listings of private equity and VC funds coming. And for us, we believe the incentives that we have put in place are going to attract that. We've also made it, we've now allowed for limited liability partnerships. Originally, the law was that you could only become a PE if you're a limited company, but we've relaxed that. The law has been changed to allow for limited private partnerships to also come and list, and register and be licensed as capital under the capital markets. We also see that in the near future, we are going to see a lot more of those firms coming and getting domiciled within Uganda. But generally, looking at the other listings, there are a number of I think companies that are now that are ready, and we've been engaging these companies, and we do believe that we're going to see a few more listings coming around, even corporate bonds. We still think that we're going to see corporate bonds coming. We know that government is thinking about doing a sukuk bond for some of their infrastructure projects. We believe that once government leads, we are going to see a lot more other private companies coming to the market.